Welcome to the Money Metals Midweek Memo, news and commentary relating to sound money, the precious metals markets, and the economy. I'm your host, Mike Maharrey. Thanks for tuning in. So there were a couple of years when I was a kid, I was probably in high school, and my dad got a metal detector. And honestly, he never really used it very much except for a couple of years at the beach when we were on vacation. He loved to tinker with that metal detector at the beach. It was waterproof and everything, so he could get down there in the water line. And, he never found anything other than some change and a lot of metal cans. And my mom actually used to tease him for wasting his time, although he enjoyed it, so I'm not sure that it's fair to call it a waste of time, right? He was on vacation. But as it turns out, metal detecting isn't necessarily a waste of time, my stepfather's experience notwithstanding. Some people actually do find stuff with a metal detector. And in 1979, there was a couple that was using a metal detector in one of the gold fields in Western Australia, and they located a massive gold nugget. It was so massive and such an amazing find that it actually has a name. They named it the Golden Beauty. And this gold nugget, get this, it weighs in at nearly 10 pounds. Can you imagine stumbling on a 10-pound gold nugget with a metal detector? I can't, right? My imagination, I have a hard time getting past my dad digging up pop tops. But yeah, they found this massive gold nugget. And by the way, you can own the Golden Beauty. It's actually on the auction block right now. From what I understand, the opening bid was $400,000, which I suspect that the winner's going to have to do better, because if you just take the weight and the current spot price of gold, the nugget's worth around $481,800 at 10 pounds. Now, probably won't surprise you to learn that large gold nuggets like this, not easy to come by, even in gold-rich areas like Western Australia. Mining experts say a 1-ounce nugget, not 10 pounds, 1 ounce, is harder to locate than a 5-carat diamond. As Earth.com explained it, one reason for this scarcity is that gold deposits are scattered and often require extensive mining operations before any visible pieces are brought to the surface. I don't know if you've ever watched the show, I think it's called Gold Rush on Discovery, where they follow these various miners, small miners up in Alaska. And you'll see that, when they're digging this rock out of the ground, you don't see any gold. They have to take it through this big process. And then when they pull it out, they're basically pulling these little flecks of gold out of the ground. It's very rare to find these big nuggets. And I'm really just trying to underscore the point that gold is extremely rare. And of course, that's part of what makes it so valuable, right? Scarcity. And as you will recall, if you listened to the podcast a few episodes back when I talked about money, one of the characteristics of things that make good money is it has to be scarce, right? And of course, this underscores the problem with fiat currency, paper money that we have today. Governments can just print more of it whenever they want, right? You can't just print gold. And that scarcity of gold is what makes it such good money, because it can't easily be manipulated, at least in the amount, by governments. So just how much gold is there? Well, according to the World Gold Council, best estimates are that humankind has mined around 216,265 metric tons of gold throughout history. And about 2/3 of that has actually been extracted from the ground since 1950. Thanks to the advancements in mining technology and the discovery of new gold deposits. Now, just over 216,000 tons, that sounds like a pretty big number. It is a pretty big number, but really not as much as you might think. If you could gather all of the gold that's ever been mined into a single cube, melt it all down, make a giant cube, it would measure approximately 22 meters on each side. Now consider this, an Olympic-sized swimming pool is about 50 meters long, to give you some perspective. So that's not a lot of gold when you consider that that's the amount that's been mined throughout the entirety of human history. If you took all of the gold bars, or all of the gold, melted it into 400 kilogram bars, and you kind of stacked those up next to the Statue of Liberty in about the same amount of area, like the same footprint as the Statue of Liberty, that stack of gold bars would only reach to her waist. So all of this to say is there's really not a lot of gold out there. It is extremely scarce. And again, that's part of what makes gold so valuable. And I was thinking the other day, I talk a lot on the show about the demand for gold, right? We talk about central bank gold buying, which, by the way, we just got the data on the central bank gold buying for April, and central banks are still buying gold. They added about 12 tons of gold on net, which actually is a little bit less than what we've been seeing. Part of that was because there was a big sale of gold by Uzbekistan. But if you want to get into the numbers there on the central bank gold buying, you can go over to moneymetals.com/news and check out the article. I'll also link it here on the show notes page. But anyway, so we talk a lot about demand. Haven't really delved a lot into the supply side of gold. And there's some interesting dynamics kind of looking at the big picture that are going on there. The interesting thing is if you look at gold mine output, it's basically been flat since about 2018. And I'll also put a chart on the show notes page that shows the gold mine output. But if you go back, and you'll see it's pretty steadily upward until 2018, and then it kind of flattens. And that raises a question. Could this signal that we are at or near peak gold? Last year, gold miners produced about 3,661 tons of gold. And that was actually a new record for mine production, but it was only 3 tons higher than the previous record that was set back in 2018. So again, if you look at the chart, you'll see that we have a pretty steady increase in gold production up until then, and then it's flatlined. After slowing for several years, gold mine output fell by 1% in 2019, and that was the first year of absolute decline in mine production since 2008. And it's kind of showing this general trend of diminishing mined output. So it's really hard to explain this without the visual. I encourage you to go to moneymetals.com/news, find the show notes page for this podcast, and you'll actually be able to see this chart. But up until 2019, mine production generally increased every single year since the 1970s. I mentioned that there was a drop in production back in 2008, but that was an anomaly. And it was basically kind of the dynamics surrounding the onset of the 2008 financial crisis. The return last year to the 2018 mine output level is encouraging, if you're worried about gold production, but it's really too early to say that we have returned to an era of increasing mine output. There's no evidence of that yet. And again, some industry insiders believe that the plateau in recent years signals that we are close to peak gold. I mentioned that term already. So what do I mean when I'm talking about peak gold? Well, that is the point at which the amount of gold dug from the earth begins to shrink every year, right? So again, since the 70s, we've had this general increase every year. You get more deposits, you get better technology, better mining techniques, so you get more gold. And we've seen that since the 1970s. But there is some point, a lot of mining industry insiders say that you're going to hit a peak. You can't get any more gold out of the ground every single year. And at some point, you might even start to see the amount of mined gold decreasing. So when the World Gold Council released its gold demand trend report back in 2022, it actually cautioned about this. It said, quote, "This lack of production growth gives further credence to claims that gold production is close to plateauing." Now, I want to give you a little bit of a caveat here, because when you talk about something like peak gold, it does sound a little bit like a conspiracy theory, right? And you will get people that'll, "Oh no, we're running out of gold." No, I'm not trying to, I don't want to hype this beyond, what it should be. I think it's an important point to understand. I think it's important to understand that there are diminishing returns in the world of mining, and that could impact gold supply over time. But I'm not trying to, be one of these guys that's like, "Oh my gosh, you better buy all of the gold that you can find because we're going to run out of gold." No, that's not the point that I'm trying to make. I want you to understand this in a little bit of a more nuanced way. Peak gold is a theory. I mean, it may not even be a reality, but it is interesting to kind of look at what some of the people are saying, how long they've been saying it, and kind of look at the dynamics, because it does seem like we are kind of entered into this period where, if at best, we've kind of plateaued with the amount of gold that's being extracted from the earth. So, I mentioned the World Gold Council. Other players in the mining sector have raised concerns about the prospect of peak gold over the last 10 years or so. And I'm just going to give a little bit of an overview. Go back to 2016. Mining.com analyzed data, and it concluded that, quote, "There are no more easy gold discoveries." And that very same year, MarketWatch asserted that we're heading for a, quote, "impending gold production cliff." And this was based on analysis by Sprott Asset Management. And at the time, analysts said gold discoveries peaked in 2007 and that there would be a production peak that would soon follow. Now, as you're thinking about this, it's important to think about kind of the how long it takes to find gold and then get it out of the ground, right? It's not like, I can go out and find this gold deposit and then, next month I've got a mining operation, I'm digging gold out of the ground. It's not like that at all. You have to discover the gold. You have to, make plans. You have to develop infrastructure. It takes a long time from exploration to actually producing gold, okay? So that's why they're talking about that they thought, this was back in 2007, Sprott Asset Management was saying that the number of gold discoveries, new deposits, had peaked in 2007, and that a production peak would follow along in the future. So fast forward to 2017, World Gold Council Chairman Randall Oliphant actually cautioned that there are signs that we're reaching peak gold. So this was a little less than 10 years ago. He said, "In the near term, production is likely to plateau at best before slowly declining as demand rises." He said, quote, "We're not going to fall off a cliff in the near term." So he's kind of making the same point that I am. It's not trying to cause panic. But he said, at the same time, it's really hard to see how we're going to produce enough gold to meet all of this demand. And this was actually at a gold conference in Colorado. At that very same conference, Franco-Nevada Corp CEO David Harquail said that the gold mining industry was in a, quote, "growth phase, where new mining projects are simply replacing older assets that are running out of ore." So you're still getting new discoveries of gold, but they're basically just replacing mines that are mined out. The next year, 2018, Goldcorp chairman Ian Telfer, he said, "We're right at peak gold here. I don't think there are any more mines out there or nothing significant. And the exploration records indicate that." So you'll kind of notice a theme here. They're talking a lot about gold discoveries, that we're not finding a lot of new gold. Now, since then, I have heard about some new gold fields, some new gold discoveries. So it's still happening, right? It's not like there's no more gold, okay? I really want to emphasize that. I don't want to I don't want to be the crazy guy running, the sky is falling. But I do want to make these points because I think it's important especially if you're a long-term gold investor. So the following year, Deutsche Welle, or actually, if you're going to be correct German, Deutsche Welle, produced an article, and the headline was, "Is the world running out of gold?" And basically, it was making the case for peak gold. The report highlighted the shrinking number of new deposit discoveries and also mentioned the fact that you have declining ore grades. So, you get the best gold first, basically. So over time, especially as a mine ages, the quality of the ore, the purity of the gold in that ore, and the difficulty of extracting it becomes greater, right? This was from that Deutsche Welle article. The largest and most prolific reserves have already been found. This was a guy named Matthew Miller. He was an analyst for CFRA Research. And he went on and he said, gold miners are struggling to grow reserves in line with their production. And then more recently, American Hartford Gold, CEO Stanford Mann wrote an article for Forbes making the case for peak gold, noting the declining number of new gold discoveries. And he wrote this actually last fall, I believe. He said, quote, "The 1990s saw 132 deposits identified. By the first decade of the 2000s, there were 93 deposits. In the past decade, 25 were discovered, with none in the past 3 years. And of the 278 discoveries of the past 30 years, about 135 are not yet in production." That's pretty wild to think about that. You had 278 discoveries, 278 new gold deposits over the past 30 years. About 135 of those, so half, are not yet in production. And you wonder, well, will they ever be? Because again, mining is a very expensive business, right? It's not a business for the faint of heart. According to a report by S&P Global analyst Paul Manilow, that was released last fall, there have been 5 major gold discoveries since 2020, totaling about 17 million ounces of gold. Quote, "The lack of quality discoveries in the recent decade does not bode well for the gold supply." And, it's interesting. South Africa is something of a case study in peak gold, right? The country was once the world's leading gold producer. And then in 2020, it actually dropped out of the top 10. Now, I was trying to find for this year, there's not a lot of good data about the ranking of countries yet, but it looked like South Africa is kind of there tied for 10th with a number of other countries. So it's kind of there on the bottom, but it's not producing nearly the amount of gold it was, 20 years ago. In fact, if you go back to December 2017, there was a study that was by some South African government entity, and it basically said that the country could run out of gold within 4 decades. Analysts said that at the current production levels, the country only had 39 years of accessible gold reserves remaining. Now, of course, that's, assuming that they don't find any new deposits and whatnot, but still, very interesting that was an official government study. Now, if you are, a mining person, or if you're worried about the gold supply, there is some cause for optimism on the other side of the coin, right? Technological advances could help mining companies identify new deposits that were not discovered before, and I think even more importantly, reach more difficult to mine gold, right? There's a lot of gold that was close to the surface that's already been dug up. It was easy to get, right? I mean, you think of the guy in Alaska panning for gold, right? Most of that has been dug up. Most of that's been pulled out of the ground. So a lot of the gold that remains is deeper, it's in harder to reach areas, and technological advances can help get to that gold more cost efficiently. And as I've already mentioned, the rising price of gold can also boost exploration activity, right? If gold mining companies are bringing in more money and it's worth more for them to find the gold, it's going to lead to new discoveries. But Manilow he projected that the gold supply would actually peak in 2026. So that's this year. And he called the future trajectory for the gold supply a, quote, mixed bag. He said, quote, "The focus on old and existing assets has taken a toll on the number and size of discoveries in recent years, as proven by the lack of substantial discoveries in the last decade. However, the increasing gold budgets since 2017 bring a tad of optimism for the future of the gold supply as the number of initial resource announcements continue to grow in size and number." So, as we're seeing the price of gold go up, we're seeing more exploration. It's a supply and demand thing in the big picture. If you're a miner and you see gold is all of a sudden, $3,500 an ounce, $4,000 an ounce, it becomes much more of an incentive to get your rear in gear and get that gold out of the ground. So, bottom line, when we're looking at the supply, whether we have reached peak gold or not, it remains debatable. Right? But it is clear that production has plateaued, at least in the short term. We've seen this plateau since 2018. Looking ahead, we'll have to see if we see some increases. According to what I've read about the projections for this year, the World Gold Council is projecting that mine output is going to be basically on par with what it was in 2024. So, again, I think I just said a minute ago that 2026 is this year. This is not 2026. So Manilow, the S&P global guy, he said that supply would peak in 2026. That would be next year, not this year. Anyway, it's early in the morning. Give me a break. But anyway, again, whether we've actually reached peak gold or not, very debatable. But again, production has plateaued. At least we're seeing that in the short term. And reversing the trend is going to require a significant industry focus on finding new deposits, developing new methods to extract difficult to reach ore from the ground. The fact that gold is over $3,300 an ounce should help the mining industry. But, it's like a big ship. It's not going to turn quickly. So I'm not going to expect to see any, big jumps in mine output in the next 6 months or a year or anything like that. So something to keep an eye on, the supply and demand dynamics. Again, we focus a lot on demand. Supply is also part of the equation, and there's, just in general, not a lot of gold. And again, that's what makes it valuable. And, meanwhile, demand is continuing to increase over time. The rapidly rising price has actually created some headwinds for gold as far as demand goes. I think a lot of people are still psychologically adjusting to $3,000 an ounce gold. So we're really seeing those headwinds in the jewelry sector. We saw some slowdown in central bank gold buying this past month, as I've already mentioned. So, it does create some demand headwinds as you get those higher prices. But, as I've been talking about on the show for the last several months, there are plenty of dynamics in play that support the gold price, right? We've talked a lot about it, the debt, the malinvestments in the economy, the results of decades of monetary malfeasance by the government and the central bank that have not been reckoned with yet, that will be reckoned with, that are going to give gold a further boost. The timeline for that, how it's going to play out, don't know. But those things are looming in the background. Meanwhile, everybody's focused on tariffs. It's so wild to watch the price of gold swing on tariff news, right? We got some news early this week that, some of the trade negotiations with China weren't going well, and boom, big sell-off in stocks. Gold went up like $80 an ounce. And then, the next day it sold off. So we see this yo-yo action. And I want to emphasize that again. I talked about this really in depth last week, the fact that, or maybe it was a couple of weeks ago, but don't miss the forest because you're staring at the tariff tree, right? There are other things in play. But kind of looking at the big picture, Bank of America is actually now eyeballing $4,000 an ounce gold and $40 an ounce silver by the end of this year or early 2026. And Bank of America not has not done too badly on its projections. It actually did project $3,000 gold in 2025. I don't think they projected $3,500 an ounce gold in 2025, but they at least got the $3,000 right. The analyst said that trade-induced geopolitical uncertainty is going to continue to support the metals. And I think this is actually more key than the trade war stuff, growing concern about the U.S. government's fiscal situation, possibly being the catalyst for the next leg up. This is from the Bank of America note, quote, "So far, trade disputes have predominantly affected the economy by disrupting supply chains and weakening confidence. Incidentally, the USD has also declined alongside these developments. We still believe that gold could end up being a less risky investment than treasuries." I agree with that. In fact, I would say that given that the United States has a $37 trillion national debt, and it can't seem to solve the spending problem. You've got Trump out there criticizing Rand Paul, who has objected to the increased spending or the increased deficits in the budget. There's no political will outside of a few people in Washington, D.C. to deal with the borrowing and spending problem. So I would argue that treasuries, yes, they are a risky investment. They are a risk asset. Gold and silver are the safe havens. And, we've seen this. I've talked about this on the show. Treasury yields spiked after Moody's downgrade of the U.S. credit rating. That indicates that investors are becoming more wary of holding U.S. debt. There is a declining demand for treasuries. There's a declining demand for U.S. debt because just look at Uncle Sam, right? He's a mess. He's my drunk uncle who keeps spending money and wants me to give him another credit card. Bank of America's head of global commodity and derivatives research. That's a title for you. I hate to have to put that on my email. His name is Francisco Branch. He told CNBC that gold appears to be in a correction phase right now. I would agree with that. We hit that $3,500 an ounce record in April. And since then, we've kind of traded sideways. We've seen very big swings, a lot of volatility, but basically between kind of that $3,000 and $3,300 is kind of where we've settled in. But Branch said the long-term outlook remains bullish. Quote, "We think longer term, maybe into the second half of this year or into 2026, we'll breach $4,000 per ounce. But we're going through a correction because some of the extreme uncertainty that we've witnessed in recent months seems to be fading," right? So he's talking about the fact that we had the Liberty Day tariffs, and that really sent markets into a spiral. And since then, we've had some of those tariffs, kind of rolled back and put on pause, et cetera, et cetera. So a little bit more uncertainty, but still a lot of uncertainty out there. He said this consolidation phase could last for, quote, a few months. Bank of America analyst also said that to drive gold higher, we need to see an increase in investment demand with jewelry demand stabilizing. Quote, "To provide some context, investment would need to increase by 18% year over year for gold to hit $4,000 an ounce. That may sound like a lot, but purchases exceeded that tally in 2016 and 2020, twice in the past decade, highlighting that it is very possible." And I do think, we've talked about this before, the demand dynamics for gold over the last year or so have really been driven by the East, by Asian demand, by China, Japan, Asian countries really buying a lot of gold. They are buying up gold bars and coins at a staggering rate. I think China had a record in gold and bar coin demand. I think it was a first quarter record. So that's happening. But meanwhile, in the West, we've actually seen a decline in investment demand for physical gold. And I think at some point, American investors, Western investors are going to hop on the bandwagon, and that's when you're going to see this big increase that we're talking about from Bank of America. And then he mentioned jewelry, the jewelry market stabilizing. I think that's a given. I've read a lot that talks about the fact that, India and China, they drive the gold jewelry market, and they tend to be relatively price-sensitive consumers. And I think there's a little bit of a sticker shock, right? We're still getting used to $3,000 gold. But once people kind of psychologically adjust to that, I think the buying is going to come back into the jewelry market. So, as I mentioned, there's a lot of untapped investment potential in the U.S. And I think at some point they will tap into that. As for silver, Branch actually called it one of the, quote, better investments. He said, quote, remember, silver is half precious, half industrial. The precious aspect of silver has been driving it higher. The industrial side has been taking a back seat, but this will eventually change. Of course, I actually disagree with that. I really think that the industrial demand has been more of a factor in the silver market than investment. Industrial demand set a record last year. Investment demand has been pretty sluggish. So I actually think that Branch kind of has this backwards. But he said that when we see kind of a settling out of the tariff situation, we're going to go into a slower period, which will last for a quarter or two, and eventually we will see another pickup in industrial activity. So, we don't know. There may be some headwinds for industrial demand right now, given the tariff uncertainty. But if you look back over the last year or so, it's really been industrial demand that has driven that silver demand. Industrial demand is expected to remain robust in 2025, despite some of the headwinds and the tariff worries and the supply chain disruptions. And I think part of this, I've talked about this before, and I talked about it with Greg Weldon when I interviewed him a week or so ago. The industrial demand has some support under it from governments, right? A lot of this is being driven by green energy. There's a lot of silver going into solar production. That's not going to change, right? Governments aren't all of a sudden going to say, oh, we're not doing green energy anymore. This is a huge priority globally. We can argue about global warming, whether this is the best way to go or not. Doesn't matter. This is what the world thinks, right? And so we have to deal with the reality as it is, not how we think it should be. And so this government support, even in a recession, I think you're going to see support for silver in that green energy environment. In fact, you may even see more support for it if we went into a deep recession, because we know that governments love to do stimulus. And, one of the favorite stimulus things is infrastructure. So I don't think that the tariff uncertainty really in the long term is going to impact the silver demand as much as some might. Branch noted, and this I think he's absolutely correct, that gold tracks with silver over time, or I should say silver tracks with gold over time. Much more volatile, much more up and down, but over time, as gold goes up, silver tends to go up as well. He said, quote, if you are to model silver, the main drivers are, of course, the price of gold, because silver is largely a precious metal, but also what's going on with industrial activity. Right now, industrial activity is going to be weaker, so that's one of the reasons silver has lagged on the large upward lift in gold prices. It's really that weaker industrial factor that we're seeing today. Again, I'm not sure I agree with this. I really think that it's the investment factor. I think when things really start to unravel, right? When the monetary malfeasance, when we begin to, the chickens come home to roost, I guess is the cliche I'm looking for. When that happens, you're going to see a lot of investors dive back into silver. I think a lot of investors have sat on the sideline kind of waiting to see what happens. And typically, silver tends to lag gold in a gold bull market. This isn't unusual, right? We can go back to 2008. We can go back to the pandemic. We saw this where gold took off. We ended up with these very wide gold-silver ratios, 90 to 1, 100 to 1. During the pandemic, I got something ridiculous like 130 to 1. And then it snaps back to the mean. Silver is a laggard, but it eventually catches up historically. Branch said that if there is this squeeze on industrial demand, it's going to be short-lived. And again, kind of going to my point, he said it would be strongly supported by growth in the green energy sector, specifically solar power. power. So, gold and silver, $4,000 an ounce, $40 an ounce, according to Bank of America. So they don't think the gold bull run is over. I don't think the gold bull run is over. We've got all of these dynamics, supply, demand. Most things look positive for the metals moving forward, especially in an environment where people are worried about getting out of dollars. They're worried about the U.S. government. There's this de-dollarization going on. We're seeing dollar weakness in the dollar index. And really, ultimately, when you get down to it, it's not so much that gold is getting more expensive. The fact of the matter is your dollars are losing value. Fiat currency is losing value. The government is devaluing your money. It is on purpose. It is relentless. Remember, 2% inflation is the target. So they want to devalue your money 2% every single year. That's the plan. And, good luck at them keeping that reined in. So you want to have gold, you want to have silver, you want to have real money. You don't want to be sitting on a big pile of dollars that are just losing value every single day. So today is the perfect time to call 800-800-1865. Talk to a Money Metals, precious metals specialist. Get yourself some gold and silver. These folks are fantastic. They can help you figure out whether you want gold or silver, how you want to mix that, what products you want to look at. Again, they're fantastic. They can help you figure out how precious metals will fit into your investment strategy. I know a lot of people don't like to talk on the phone. You don't have to. You can go to moneymetals.com and chat with the precious metals specialist online. Or if you know what you want, you just want to add to your position of gold and silver, or maybe you never bought gold or silver and you want to get into it, you can just go to moneymetals.com, find what you like, and you can buy it right there online. For folks who may be thinking, I would love to, but I just don't have the money. I don't have $3,500 to buy an ounce of gold. I can't buy a bunch of silver. We actually have a really cool program at Money Metals where you can add to your precious metals portfolio every single month. It's a monthly plan. You can do it for as little as $100 a month. So you commit $100 a month and you get that much gold or silver every single month. You adding to your position, and of course, you're basically trading less valuable money for more valuable money over time. So check that out. All of that information is over at moneymetals.com. So with that, we're going to call that a wrap for this episode of the Money Metals Midweek Memo. You can get more information about everything that I've talked about on the show today and a lot more over at moneymetals.com/news. And if you want to get the latest news and information relating to gold and silver right in your inbox, make sure you sign up, get on our email list. Of course, you can subscribe to the Midweek Memo on your favorite podcasting platform. And when you do, make sure that you also listen to our Market Wrap podcast every Friday, where you're going to get a quick overview of the week in precious metals, along with conversations between yours truly and a lot of interesting people from the world of gold, silver, economics, and investing. As always, thank you so much for listening to the show. I really appreciate it. If you like it, do me a favor, go to your podcasting platform, write us a good review, give us the 5 stars, give us the thumbs up, share the episode. It really helps to grow the show, and I would really appreciate that. So thanks again for listening, and I will talk to you again next week.